Hello and welcome. This is Property Hotline with me, Kavita Krishnan. We are joined today by Suresh Surana. He's the founder of RSM Astute Consulting. He will be answering all your tax-related queries. Suresh, welcome to the show.
Sure. Thank you.
We have Mohar Singh who's called in from Mumbai. Mohar, what's your question? How can we help you?
My question is that my wife had a property, had a flat in Pune, which we had sold on 9th of October 2015, and the capital gain that was coming was rupees 50 lakhs. 50 lakhs. 50 lakhs. Hello?
Yes, we can hear you. Go on.
Then she had a house in Lucknow, ancestral house. So that also was sold on 17 December 2015, wherein the capital gain was 1.64 crores.
Okay.
1.64 crores. Now, this amount we wanted to utilize to purchase a residential house in Mumbai, but the total cost, the total capital gain amount was coming to, as you know, 2.14 crores. So for this amount, we could not buy any suitable accommodation in Mumbai, despite our best efforts for about 1 year now. So, in the meantime, before filing our return for on 31st July 2016, we opened capital gain account, two capital gain accounts on 19 July 2016, one for 50 lakhs, another for 1.64 crores.
Okay.
In the name of my wife. And these two capital gain accounts are existing there. And now I want that if I pay the income tax on these both the capital gains, can I do so at this stage now? And what will be the rate of? It is a long-term capital gain in both the cases. 50 lakhs and 1.64 crores is a long-term capital gain. Now, how much will be the income tax percentage?
So you basically want to know the income tax implications on the money that you've deposited in the two capital gain accounts. Am I right?
Capital gain account for the property that were sold.
For the property that you had sold, right?
In 2015 October and December 2015.
Yes, Mohar, we got that. Let me get in Suresh. Suresh, what are the income tax implications over here?
Yeah, so basically what happens, I mean, what you did was, right, that before filing the return, if you are not invested and you are not willing to pay the tax at that stage, you have to deposit the money in capital gains accounts, deposit account, which you have done correctly. Now the point is that once you have invested this amount, you have to hold it for 3 years, and at the end of 3 years, because that is the maximum permissible period either for purchase or for construction, if you have not still utilized at the end of 3 years, then when you withdraw the amount and you have to close the account, that is deemed to be income of that year, and it will be subject to tax at the rate of long-term capital gains. So like this will be in the financial year then 18-19.
So Suresh, what you're saying is till 18-19 he doesn't have to pay income tax on this because it's already in a capital gains account, and if he uses it before 18-19 he will not have to pay income tax. Is that right?
If he uses for purchase of property, he definitely will not be paying the capital gains tax, and of course he has to hold the new house for 3 years, but other than that, that will be exempt. Now if he wants to do before that, you have to approach the assessing officer to give a no objection. And that time, unfortunately, the way the law right now says that only on the expiry of 3 years in that year, if you have not utilized till that time, then it will become taxable in that year. But whether you can then revise the return, let's say if you give an undertaking that you revise the return for this last year and pay the tax, and on that ground he gives you a no objection to, to withdraw the amount. In that case, you will have to pay interest. You will not have penalty, but interest will be applicable. But that is up to the assessing officer while giving no objection what condition he puts.
Okay. But as of now, this year he does not need to pay any income tax because he specifically asked about the income tax treatment on the capital gains.
Yeah, no, the only question is if he wants to withdraw from the capital gains account scheme that money, that is not possible without the no objection of the assessing officer.
That he will have to go.
So either he has to go for two options, wait till financial year 18-19 when 3 year period expires, and that point in time when he closes the account, without utilizing it for buying property, that point in time in that year it will have to be taxed as long-term capital gain. But if he wants to do before that, maybe you have to, when you approach the assessing officer, you have to tell him that you are willing to revise the return of last year, pay the tax and interest on that, and then the assessing officer gives you no objection to close the account.
Right.
Even
so
right now.
So it's a long winded process out there, and also what you need to understand is you will have to pay the tax then for the last year, not just for this year, you'll also have to pay it for last year. So you need to think through that decision that you're making and then actually think whether or not you want to withdraw money from the capital gains account.
Yeah, and also just one more point on that while this money is lying, there are two types of account. One is a saving account and there is a deposit account also. So if you are not earning interest on this, you can transfer the money to the deposit account as well. So at least in the meantime, you are earning some interest on
Exactly.
that. Yeah.
So you can make your money work for you. Next, we have Vandana, who's written in on our website, www.mbnow.in. Now, she wants to know if she can reinvest the money that she has received from the sale of an open plot in another property. Can this amount be reinvested in a commercial property if she sells a residential property and doesn't claim long-term capital gains? Is she allowed to reinvest the entire amount that she has received in a commercial property? I think, Suresh, here the question is not whether she can reinvest. The question is whether she will get the deduction.
Absolutely. So you can definitely invest. There is no restriction that if you sell a plot, you have to invest in only in the residential property. Only if you want to claim exemption, then under section 54F, you need to invest the entire sale proceeds in the purchase of residential property. If you invest in commercial property, then you will be subject to long-term capital gains tax, which means you will get the benefit of indexation. You will get the rate, which is lower rate of 20%. But after paying the tax, you can definitely invest in any commercial property.
Right. So if you want to avail of the deduction that you can get on long-term capital gains tax, you have to reinvest the gains in a home. You have to buy a home. You cannot reinvest the gains in a commercial property, which is a shop or an office. Also, what you need to remember, and is very critical, is that if you're buying a ready property, if you're reinvesting against a ready property, it has to be done so within 2 years, and you get a time period of up to 3 years to invest in under construction property, with a caveat that under construction property will be delivered within the 3-year time period.
You are almost becoming a tax expert.
It is thanks to experts like you. Next, we have Anupama Shah, who says that she owns a flat in a building that underwent redevelopment. So she lived in the same building. Now she wants to know from which day will the 3-year period to calculate capital gains tax begin, from the date of agreement or from the date of receiving the occupation certificate. Would the 3-year period apply if she would have sold the house during construction, since she has been living in the building for a long time? This is a question that there are a lot of people, especially in Mumbai, are struggling with, because we're seeing a lot of buildings going in for redevelopment now. So if you could just answer this, and I have a couple of questions of my own, Suresh.
Yeah, sure. So Anupama, here the question is that if it is gone for redevelopment and if you receive it back within a period of 3 years, it is from the date of receiving the possession that you have to hold it for 3 years from that point onwards. If you have sold the property in the meantime, then there is a question that the whatever gain you made on account of redevelopment, that you have not reinvested in another purchase of property. So it will not be eligible for exemption. So you can't sell it even while it is under construction. And in case you are wanting to claim the exemption, which I think you definitely want to claim exemption and not pay tax on this. And you will have to count the period of 3 years of holding from the date you receive the possession, which would generally be maybe immediately after the occupation certificate.
So what you're saying, Suresh, even if I've been living in that building for 20 years and now it has gone for redevelopment, and say it took 3 years, 4 years, 5 years, whatever, and in the interim, if I sell that property, I will have to pay short-term capital gains.
It will be long-term capital gain only.
Okay.
Because you have been holding it for more than whatever period. But the point is that from the point of view of taxability, what normally you would have got exemption, you will not be able to get the exemption.
You have to pay the tax. There is no exemption that you can avail of.
Yeah, I mean there is an argument that in case of redevelopment, you still continue to hold the right in the land, and it is only the superstructure which you are changing the
exactly.
So there is a whole argument that whether the taxability, whether you can really say that you have when you are receiving, let's say, one flat for another, whether you have given up all your rights, because your right in the land continues. But I think right now the way most of the judgments are, they are taking a view that even on redevelopment, because there is an exchange of property, it is treated as a sale or it is treated as a transfer. And if you have reinvested in purchase of, again, I mean, because in the redevelopment, you are getting back the house. And if you get it back within 3 years, anyway, it would be eligible for exemption. So the safer view is that you should get the possession back within 3 years, so that even if it is considered to be taxable, it will be exempt from tax under section 54.
And what if, like in most cases, we've seen that redevelopment projects, some of them, go on for as long as 10 years. We've heard of horror stories of that kind. But 3 years, 5 years, say it extends beyond 3 years. What happens then?
That's a very good question. And the only thing, while the law says that it has to be invested within 3 years, but there are several court verdicts now, which have said that as long as you have done from your side, you have made the investment, and also in terms of the completion of construction is delayed because of any delay on the part of the developer and for no fault of the taxpayer, then that period is, I mean, this particular exemption should be taken more liberally and the benefit should not be withdrawn. But it is again not explicit provision, it is more the court interpretation that the taxpayer has done whatever he could have done. And as per the terms, if the possession was to be received. So
essentially, if you are stuck in a project like this and if the IT department does come knocking on your door, what you need to do is go to the tax appellate tribunal over there and fight out your case. That's the only thing that
already there is a Bombay High Court judgment on that, which is favorable. And so basically, obviously, you will not directly go to the tribunal. First, the tax department has to, only if they make an assessment, they don't agree that it should be exempt. Then only you will have to go to the higher authorities. But yeah, so you have to go through the process. Yeah.
And very quickly, I know we have a caller waiting with a question. But very quickly, tell me this, Suresh. There are a lot of other things that happen when your building goes in for redevelopment. You get a hardship allowance, you get rental income. What happens to all of this? Is all of this also taxable?
So as far as hardship allowance or alternative accommodation is concerned, it is not considered to be taxable because it is not in the nature of income. And again, there are
But the travel allowance, etc., that some developers might just give you if you manage to strike that kind of a deal?
I mean, most of the time what you get is either an alternative accommodation or they will give you a house rent, compensation.
Right.
To provide so that you can arrange for your alternate accommodation. So that is what is the most common. I don't know about the travel. Are you talking about
the travel? Is because I'm talking in cases where you have a building in South Mumbai and you are forced to move to the suburbs because of the redevelopment. And there are cases where a travel allowance is given in that case.
Yeah, so I would say whatever you call it is essentially in the nature of compensation for alternative accommodation.
So it can't be taxed.
Until that, so no, that will not be taxed.
That will not be taxed.
Yeah, because it is not income. It is basically in the nature of compensation for hardship.
Right. So some relief there for people whose buildings are going into redevelopment. Next, we have Sudhir Shetty, who's joined us on the phone line from Bengaluru. Sudhir, what's your question?
My query is, ma'am, related to a redevelopment of a property. My father was a tenant earlier, and now that particular property is going for redevelopment. And due to age and a mutual consent within the family, we are registering that property in the name of my sister. Now, immediately once the property is redeveloped, we want to sell it. The value is not much, about 40 lakhs. So will I be taxable?
Will you have to pay tax or will your sister have to pay tax?
No, in the sense, once we sell this particular property, will it come under tax?
Will it come under tax?
So I think Mr. Nagarajan, the question is, okay, you have been tenant of the property earlier, and when you get in the course of redevelopment another property, as we discussed earlier also, then under section 54F, it is deemed that whatever was the proceed of tenancy, you have reinvested in the purchase of house, and therefore that will be exempt. But then you have to hold that house for 3 years, and it has to be, if it is in the meantime gifted to the sister, then the condition of holding it for 3 years will not be met. So your father has to hold it for a period of 3 years post the completion.
No, Suresh, I recall Sudhir speaking to us earlier. He had approached us for legal advice on this particular transaction. And what he had been advised to do was, enter into an agreement with the developer in such a way that the house anyway is transferred in the name of his sister. That is during the redevelopment process itself. So the question is that the flat will now be in his sister's name. And if that is the case, does his sister then have to pay tax if she is going to be selling it as soon as she gets the possession of the property?
So ideally then the way to do it is that you have to say that your father assigned the tenancy right to your sister. So then what happens? The gain which is arising on the surrender of tenancy right, because essentially what is happening when the tenancy right is being surrendered, one is getting a ownership flat in exchange. Now that will arise in the hands of sister only then. And then sister would have reinvested it in the purchase. And in the case of a gift, the period of the previous owner is also counted. So it will be a long-term capital gain. But if the surrender is done by your father,
Okay.
and the investment is done by your sister, then I think we might be caught in a situation whereby the person who has got the capital gain is not the person who is investing. So either you ensure that the tenancy rights are assigned, in favor of your sister, and then she enters into agreement with the developer.
Which is what was advised to
Yeah,
me.
so then, but therefore the sort of surrender of tenancy right or the transfer of tenancy right from your father to sister should occur either concurrent or before the entering into the redevelopment agreement. And then therefore the sister is she is surrendering the tenancy right, she is getting the flat in exchange, and therefore she is eligible for exemption. She will have to of course hold it for a period of 3 years. So if she again sells it within 3 years, then it will be again subject to tax.
So essentially, Sudhir, what your sister needs to do is hold this particular flat for 3 years. If not, she will have to pay capital gains tax on that particular transaction. Also, very quickly, Suresh, since what date will her capital gains, will the indexation actually start? Will it start from the date when the transfer actually happens in her name?
No, because this is a case of gift. So in case
How
of
do you
gift,
take the cost of the flat?
So in case of gift, you take the cost to the previous owner. Now if it's a tenancy right, presumably there is no cost. So therefore there may not be any sort of cost to take benefit of the indexation.
Right.
If it was a purchase, then yes, whatever was the cost to the father. If father acquired the tenancy right and paid a price for it, that will be the cost, and then the benefit of indexation will be available for the entire period, including the period held by which has been held by your father.
Okay, so Sudhir, it's a quite a complicated transaction that you have decided to enter into, and I hope that we've been able to show you, all the intricacies of it. But my advice to you would be this: that you'll be best off consulting with a tax lawyer who can actually explain you on all aspects of this particular transaction. Right? If you do have any other questions, you can of course get in touch with us. Raji Nagarajan joins us from Mumbai. Raji, what's your question?
See, my question is that I have sold I have registered a new flat in 2012, but I sold my existing flat in 2013. But till today, he has not given me the possession. So I have invested only half the amount in that new flat. So now what I should do? Bank is also not giving me interest. What I should do?
Bank is not giving you interest on the capital gains, the money that you parked in the capital gains account. Am I right, Raji?
Yes, yes.
Right. I think that was partly answered by Suresh. Suresh, what would you say she do?
Yeah, so I think what it appears is that when you sold the previous property, you deposited the amount in capital gains account. 50% of that you have invested, but you haven't got the possession as yet. And the remaining 50% is still lying in the account. Now the point is that you have to ensure that within 3 years, you make the investment. That has to be done. If you don't do that, then whatever is the amount lying in the account at the end of 3 years, when you apply for closure, then the assessing officer will give you the no objection and you will have to pay tax on that 50% amount. Now the first 50% what you paid, I think you will have to again go by what we talked about the earlier court verdicts, that although the house has not been completed within 3 years, but it is beyond your control, you entered into agreement by which possession was to be given within 3 years, and therefore it is beyond your control. and then hopefully sort of claim the exemption.
Suresh, my understanding of Raji's question is this, that she's probably on a construction linked plan, which is why she's only reinvested 50% of the gains and not the rest of the money. Now, if that is the case, and here she has clearly shown the intent to reinvest the gains that she made from selling the earlier flat in a new residential property, in that case, won't the tax department cut her some slack? Does she still have to pay income tax if the project is delayed and she doesn't get possession within 3 years?
Yeah. So, I mean, we are presuming that your original agreement, what you entered into, provided for possession to be given within the period of 3 years. So, suppose if your initial agreement itself provided for for the possession to be beyond 3 years, then you are not fulfilling the basic conditions, because basic condition is the construction of the house must be completed within 3 years. The only relief which the courts have given, that as long as you have entered into agreement with the developer, which provided for a possession date within that period of 3 years, but the developer has not given you, the possession for reasons which are outside your control, then you cannot be asked to pay tax on that amount. That is the only limited relief available.
So, Raji, essentially you need to prove that you were supposed to get possession within 3 years. You sold the flat, like you said, in 2013, which means you have time till 2016 to reinvest the gains. And if, say, you've entered into an agreement with the developer saying that the flat will be delivered by December 2016, then you're well within your rights to actually go and tell the income tax department, look, I have already reinvested 50%. Now the developer's delayed possession, it is not my mistake. Okay. Moving on, we have Vivek, who's posted a question on our website. Now Vivek stays in Mumbai and he occupies a flat owned by his father. Now Suresh, he's paying rent and claiming HRA. He also bought a flat in Pune and got its possession last year. He wants to know if he can get tax benefit of 2 lakh rupees on the interest and 1.5 lakh rupees on the principal amount. He's planning to keep the Pune flat vacant, but he wants to claim the benefit on the interest on this flat, which is around 3.5 lakh rupees. He wants to know if he can show a notional rent and claim tax benefit for the entire amount paid. He has paid interest worth 3 lakh rupees before he got possession and divided it into 70,000 rupees. I think he's done all his homework there. He just wants your seal of approval.
Yeah, so basically, I mean, the fact that you are staying in Mumbai and you buy the house in Pune, it still, there is no condition that for claiming the self-occupied property, you need to actually stay in that house, or the house should be in the same city where you are living. So you can claim the exemption for self-occupied property even for your Pune house. So that is point number one. Second thing, for self-occupied property, interest deduction up to 2 lakh rupees is allowed. So that you will be able to get. And the principal amount up to 1.5 lakh rupees under section 80C along with other deductions is also eligible.
Suresh, I think he wants to know whether he can claim exemption on the Pune property by showing it as property that has been rented out.
Yeah, so so my point is that first of all, if the only objective is to claim 2 lakh rupees interest and 1.5 lakh rupees principal amount, it doesn't need to be shown as let out, or notional income also doesn't need to be shown.
No, he wants to claim exemption on the notional rent.
No, notional rent will be taxable as income. It is not an exemption. So notional rent will become income, and against that you will be able to claim the deduction. The question is whether interest is more than 2 lakh rupees. Then only it makes sense to show notional income, and then it depends upon how much is the notional income, because to that extent you are increasing your income artificially without actually having income. So I don't think that really makes sense. I think what you really need to look at, there will be no deemed income for this property. It will be nil. But you will still get deduction of interest of 2 lakh rupees. You will get deduction of principal amount of 1.5 lakh rupees under section 80C. And for the interest paid during the pre-construction period, it is allowed over a period of 5 years.
Right.
But that is counted within the limit of the 2 lakh rupees. So I do not see any purpose by which by
You're
showing
actually
notional
increasing
income.
your taxable
Yeah,
income
exactly.
by
You
doing
are showing
that,
artificial income which is not there.
Which is not there, so it really doesn't make sense for you to do that. But yes, you can claim exemption, the exemptions that you anyway get on your home loan on the principal repayment and the repayment of the and the payment of the interest component.
Yes.
Narendra Gala has called in. How can we help you, Narendra?
I'm fine.
Yes, Narendra, tell us very quickly what's your question.
My question is, I'm an NRI. I have some ancestral property. I sell the ancestral property and get the money from that. Can I invest it in 3-year tax-free bond? I'm told then I don't have to pay any taxes in India. Is that true?
Yeah, so Narendra, even if you are an NRI, you are allowed to inherit any property in India. In fact, even agricultural property, which normally if you are a foreign citizen, you cannot purchase. Even if you are of Indian origin, you cannot purchase an agricultural land or a farmhouse. But for inheritance, they have allowed even that. So you are definitely allowed to inherit the property. There is no approval required of RBI for that purpose. The second thing, you can sell the property. The sale proceed has to be deposited in the non-resident ordinary account, NRO account.
Right.
You can remit the money out of India if you like up to $1 million. If you want to invest in bonds up to 50 lakh rupees under section 54 EC, you can do that and claim exemption also. And
so that's the only tax saving that you can actually do. If if it is within 50 lakh rupees, you can invest in bonds and claim. You can get exemption on that.
no,
right?
and also of course you can claim exemption under section 54, 54F, which is by reinvesting in house property. So all those benefits are available to non-resident also.
So the tax treatment stays the same whether you're a resident Indian or a non-resident Indian. Right? Hope that answers your question, Narendra. With that, it's a wrap on this edition of Property Hotline. Suresh Surana, thank you very much for coming in and answering all those questions. You stay tuned to Magicbricks Now.
You can watch live TV on our website mpnow.in. Find us on Facebook at facebook.com/magicbricksnow. And don't forget to click the like button. You can also follow us on Twitter at magicbricksnow. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/magicbricksnow.